Well, good day, all. Ira Epstein of Linn Associates with your metals market update for this Monday, the 26th of August, 2019 at 2:40 p.m. Central Daylight Time. Well, today's a relief day in many ways. Let me explain that. President Trump was at the G7 meeting. We already saw the tit for tat on Friday that sent the stock market reeling down, metal market sharply higher. People were very worried through this morning. Was the president going to say something to upset the apple cart, just like what happened, if you'll remember, last year's G7 in Canada? He didn't. He was very, very presidential today, opening the door, calling President Xi very bright man, good for their economy, so on and so forth. They also put to bed the idea that Mr. Macron, the president of France, did not surprise the president by inviting the Iranian foreign minister. He told him ahead of time. So when he got there, the president was not, as some people said, locking himself in a room somewhere. This is all craziness. So you got a relief rally to a degree in the market, and that's good. But the gold market did sell off $30 from its high down here. I started off this morning at 5:30 in the morning, approximately, recording today. I knew today was going to be important, and I called it in my video, if you haven't seen it, Bollinger Band Day, because it was the key to what I thought was going to happen. You were so stretched out in markets, if you hit the top or the bottom of Bollinger Bands, I thought an event was going to happen. Well, in the gold market, it certainly happened. Let's get to the charts and let me explain what I mean. If you look at a weekly area chart of closes, you can't argue that this is a bull market. It is. And this is a new high for the many years that the market has seen. The close today at 1526 on the weekly chart, not bad at all. As you can see, you're certainly stepped much higher today in the gold, but you actually are going to settle lower on the day. You're going to be in the 1537.20 or 30 zone, so you ended up with a lower settlement price. In terms of the swing line, where you have, if you look at this low right here, this low at 1502.10 compared to this break low of 1503 is lower. So what we have is a lower low and a high that's higher than this high right here. I should have a red arrow there. I don't know why I didn't do it, but I didn't. I've got it right here, so I just missed it there. You're still over the 18-day average, which means the bias is up. So where did the resistance come in? Where do you think? Let's go back to Friday, okay? Here's your Bollinger Bands. They moved, obviously, when the market opens, but it gives you an idea where they're at. You tell me what you went up to today. You went up to 1565, hit the upper Bollinger Band, which ended up at 1561.30, and from there you fell approximately $30, back down to the 1535 area. I think the pros stepped out of the market temporarily. Could be that this is the last full week of trading before we get into the Labor Day holiday. Most of the markets, I won't be here on Monday. Most people won't. The electronic markets will be open for the holiday, their normal hours, but it's a different type of trade during that day. When you look at momentum, you're overbought. So we have a market that is in overbought territory that hit the upper Bollinger Band, where after you get, instead of coming out of a narrow band, an extended run, often that's a strong resistance point. No, I never said it's a short sale. I said it's a resistance point. Got that? And that's where the market reacted from. When you come to the gold ETF, GLD, it did not reach up there. The market did manage to, looks like it's going to try to settle lower. It's still got about 5-6 minutes left as I'm talking here. Support back at the 18-week average, resistance still the upper Bollinger Band. But if you go to GDX, it reached right into the upper band, stopped like that, and gave you a reversal from there. Not dramatic, but still a reversal where the market showed you where some resistance is. Momentum is still up. And as we look at momentum, it is overbought with a 72 reading. And either of the readings in the slow stochastic that initially get over 70 are overbought. They can get over 80. But when they're over 80, both have to do sideways action over 80 for several days or more to change from overbought to locking in a trend. It's not done that. Support back at 28.74. The gold-silver ratio, doing what I like. This ratio breaking down is, generally speaking, a bullish sign for gold and silver. So I can understand the correction. I don't know that the bull move is over. You can get more of it on the downside. But this says that a typical relationship between the two in a rising metal market, oftentimes silver does not get beaten up by gold the way that it had. When we get to the silver market, let's go back to Friday, right here. Resistance, the upper Bollinger Band, you're overbought. You reach right to it, get to 1790, 1788.10 is that number, and you backed off right away, finishing off around 1778. Not a dramatic break in the market, but enough to now be looking at it. I still think the bulls want to come back into the market on breaks, but either you embed or you correct the overbought condition. I'm not convinced they'll chase the market on that just yet. In the copper, if you knew nothing else, you go down to the lower Bollinger Band. This is why this morning when I did my morning subscriber video, I said today's Bollinger Band day. You hit it, you bounced. You didn't change the trend. You finished off the day at 254.20, which is still 160 points off that low. And yes, I think the pros took some money off the table there on the way down. You're oversold, you hit that target, and it's been a while. This was different. This was coming out of sideways action. This is not sideways action. You've already had your break, you had a reactionary rally and down. In the platinum, resistance Friday up at the upper Bollinger Band, couldn't quite get back to it. The trend in this market, however, is still up. The market has got support, I think, between the 18 and the 100-day average. That would change if the market, in fact, you'd lose the uptrend if you were to take out this break low right here, and that number is 842.60 because it gives you the pattern of higher highs, higher lows, and your pullback. You are not overbought. You have momentum that's sort of drifting sideways, which fits in with the last 3 days of pricing as the market keeps hitting the 18-day average of closes. Now, the palladium market is different. Number one, it's very overbought. Number two, it's a market that's void of a trend. You have a lower low and a higher high. We'll see if support comes in at the 18-day average if it tries to hit it. If it gets over today's high, it could all of a sudden put the market back into higher lows, and obviously you already have the higher high, which could turn the trend back up. The question is, would it follow through? And even if it did, danger zone because you're right into the upper Bollinger Band at that time. Last, we get to the dollar index, which for the past 2 days has been fighting a battle at the 18-day average of closes. I'm going to say today was a relief day. The markets didn't get the president doing anything to upset other people. He was absolutely very presidential. He opened the door for talks with China. He said he'd meet with the president of Iran. Very open. He held his ground also, so the dollar got a bounce as interest rate futures slipped back a little bit. But remember, this is sort of a relief day that nothing bad came out of all this, and that's how I'd sum up the trading of today. Now, one of the things that I work with when I'm looking at Bollinger Band tops and bottoms, I often look to see where the pivot point is. And if you don't know what a pivot point is, it's very simple. I have a 3-video free session for you. All you need to do is go to our website at www.iraepstein.com. We'll send you all you need to view it, work with it. My guess is if you're using a fairly reasonable chart service, not a stripped-down version, a nice one, doesn't have to be the craziest thing in the world, you have pivot points on it. And if you don't understand how to work with them, maybe, just maybe, it's something you want to add to your tool chest. How do you get it? Go to our website under free offers. Just take a look at what we have. You'll see this there. Choose it. You might even want to try our charting services. You can click up here, and that'll take you right to that page as well if you're watching me on YouTube. Of course, our phone number is right in front of you. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.